Hello, traders. It's 8:02 a.m. Chicago time on the 9th of December, 2019. It is Monday following non-farm payrolls. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1654. The overall market stance this morning is relatively flat, relatively even on the session. It does not look like we've gone anywhere. In a way, this is a typical Monday after non-farm payrolls. To be honest with you, there is a slight lean towards safety this morning in terms of sentiment. Crude is off 85 cents, trading at 58.35 on the January contract, off 1.44%. Remember, in crude, the composite point of control, or the most accepted price in the history of my chart going back to, I believe, 2015, is 57.28, and we've been kind of lingering in this area for some time. The bonds are up the most this morning. The U.S. bonds up 22 ticks, 0.44% on prices. The Bund is up 44 cents, up 0.26%. So, you get the point. We are in the indices. We are right inside of Friday's range. Friday for the indices had a gap up. It was a surprise. It was a surprise positive number. And we made a push and we went sideways for most of the session. Let's take a look at what's scheduled and what's ahead. Now, there's some stuff coming across the news feed regarding the phase one deal, on the trade deal. Commentary that they don't believe U.S. Agriculture Secretary Perdue says, I don't believe the tariffs will be implemented on December 15th. That's next Sunday, this coming Sunday. Tariffs are supposed to kick in from the U.S. They also said that I don't know when the phase one deal will happen. Seems like nobody does. But overall, the market's paying attention to that very, very clearly. What's scheduled? We did get balanced trade out of Germany for October, came in a lot higher than forecast. Forecast 17.5 billion euros. Surplus got 21.5. This evening, Australia gets its NAB business confidence, expecting 1. The prior is 2, and then at 8:30 Eastern, the Chinese government releases its inflation rate year on year for November, expecting 4.3%. Tomorrow, Tuesday, we get balanced trade out of Great Britain. We get the ZEW sentiment index for December out of Germany, and then a couple numbers out of Australia, the Westpac Consumer Confidence. Wednesday, we get core inflation out of the U.S. year on year, expecting 2.3%. And then the FOMC economic projections at 1 p.m. Central, 2 p.m. Eastern on Wednesday. Thursday, we get the inflation rate out of Germany. We get the ECB press conference. And we also get manufacturing index number out of Japan. Friday, to wrap up the week, we get retail sales out of the U.S. That's how the week is shaping up. Let's switch gears real quick here and look at what was expected. So we did expect to open in a gap. We were trading at 31.3850 at the time of the trader bite. The main idea behind the primary scenario was an expectation of a push higher to consolidate around 31.50. The expectation is it could push as high as the prior high at 31.55, which it didn't do, and then to finish up somewhere in between, so around 31.50. The secondary scenario is completely sideways, squished between 34, and 45, and just completely sideways. The third scenario is for it to pull back and attempt to be responsive down. Here's what we actually got. We opened up at an open auction as expected, and then we pushed higher. We pushed as high as 31.51, came off on the close, and ended up trading around that 31.45 area, which is a major stock zone for me. We left a big gap behind. The gap mid is around 31.29.375, which is in between two ticks in the ES. So I set it to 31.29 and a quarter. That's the gap mid, which is also a stock zone. Pay attention to that area. Again, the high on Friday was 31.51. So overall, scenario one in play. A couple of okay pullback longs set up on Friday, but overall it was a bit of a chop trade. Moving into the overnight session. Here's what the overnight session looks like. Let me fix the scale. The overnight session, this is Friday right here. And what we've done overnight is we've popped higher, dropped, and then have held sideways. You could see that there's an excess at the top, balance in the middle, and a taper, a pretty fast taper on the low. And that's just how it continued to play out. It's we have a market that has mid VWAP and the point of control right on top of each other. The point of control from Friday is in line with the overnight session. The market is in equilibrium right now. In this situation, I'm more likely to sell and attempt higher on the first try early than to look for a long back up into 31.51, but we'll see how the market plays out. I'm expecting this today to be an outside in type of trade. I'm expecting it to be relatively slow, which is fairly common for the Monday after non-farm payrolls. So the overnight session is not giving us too much. Volume is normal, 152,000. Volume is normal. Inventory is mostly short in price and flat in volume, so in delta. So that's how we're shaping up. Looking at ctbookmap.pro here, really let's see. Looking at ctbookmap.pro, looking at the order flow overnight, there's not much here. I mean, it's so choppy. You could see that size pops in and out, those orange red areas. We opened up, we dropped, and then we've gone sideways, and there's not been like really key collisions or anything like that. This is running off a rhythmic right now, which is my current preferred feed. But overall, it's just there's not much there. If we squish the order flow map down, we see that we get a little bit of size that's been steady down at 31.30, a little bit at 35, but those are looking more like strike prices rather than anything else. Above, we have some size at 47, 50. And then it's relatively clear up until 3160, which lines up with a measured move high. That's where we are. That's where we are in terms of order flow. It's just not looking like it'll be a super exciting session, but who knows? It's like being in the military. You know, it's you sit around and but you're prepared to take action when the events call for it. Let's take a step back and look at the bigger picture for a moment. I'm going to show you this on the 15-minute intraday chart. Let me clean off my stock zone areas. I want you to kind of pay attention to this composite, this micro composite right here. I know this is the current segment. I'm using the chart for that, but you know, there's we could tell that from the time this market had gapped up on the 25th, the week before, the Monday before Thanksgiving, you know, it had a really strong run up to new all-time highs, and then we had a big drop, and then we ended up pushing down all the way to 30.69.50, if I recall. And then we had these really interesting 2 days where you could just see, if you're watching the auction and watching volume profiles, you can see that these 2 days were primed for a push higher. And then we get the push higher on Friday on the non-farm payrolls release. Now, when I extend this profile forward to read what what the volume is saying, look at how it's shaking out. There's quite a bit of volume down below in those 2 days. In fact, good equilibrium right here. Put in, put in on at the 3114 area again, and then it's a little bit lower on this day. So the point of control for this particular micro composites 3114. And then we move up, and as we move up, you look at that profile and how it starts forming up here. It's just, I got to tell you, it's not really telling us very much. This is a very blunt, let me shift this down to get that out of the way. This is a very kind of, what this is saying here is, what's going on? I can't draw. All right, whiteboard, there. This here is just not showing us that there's a lot of consensus. I mean, yes, we do have a little bit of price consensus right at the Friday point of control. You notice that the point of control on Friday lines up with the high volume node of the last time we were here, which is the new all-time high day. These line up. The same volume, the same high volume node showed up again, from which we sold off last Monday. But overall, the profile showing that there's a big fight up here, and I'm expecting that that's likely to carry over today into today's session and tomorrow. But the market is primed to push that high. I'm looking for 3160. Let me look at my 3167 as a key area above. As it pushes through this 3150 and new all-time highs. 3167 is expected to be the next key test area based on a measured move projection. But you look at what's happened down here. You're looking at what's happened down here, and you could see a fair amount of support down in here. I'm expecting today to just is to test out Friday's low and to start working the gap and to start working this thin area, this excess that was left behind from the second last Monday. So what's the primary scenario? The primary scenario is an open auction, very lazy trade, expecting it to squeeze higher into 44, 45, right in here. And then I'm looking for it to come back to the open and then eventually squeeze lower and start moving into the gap zone before it turns back up into the close and holds sideways. Secondary scenario, again, not expecting extensive participation here. Secondary scenario is it opens and immediately slides lower into the gap zone left behind from Friday, down into the small node, the small volume node, and then expecting it to squeeze back up into the range, back into the open, test the other side, and then hold sideways. Really low expectations today. Third scenario is open, test up, and push down. Unusual, but then the last couple of Mondays have been unusual, right? This is a Monday right here, and we had a break lower. So the third scenario could happen. Open, test higher, drive down, open test drive, consolidate, and then push into the mid and into the gap zone and then hold steady up in here. Um, but I'm not seeing a feverish push towards the high, feverish push towards the high today. And you could see that Delta on Friday, as it kind of finished near the middle, Delta really could not get above the zero line and stay above there for the session. It seemed like aggressor buyers expended their effort during the non-farm payrolls release, and they were gone for the day. It just didn't seem like there was aggressive buying into a Friday session. So I'm expecting that to show up today in terms of week longs selling, which means it's likely to test lower. This is why the three scenarios are looking for a test of that low. Scenario 4 is test down, drive up, and then push that 31.55. Squeeze the 31.55 into 31.60 and then 67. I won't draw that on here not to confuse things. That's how things are shaking out. You know, that's it's just mind your stops. Make sure you're being patient. The effort in trading is to take action when action is required to be taken, and we only take action when we see an edge, which means that we are only risking our money when we have a decent opportunity, a predefined opportunity to make money. Otherwise, you are supposed to be bored. You are supposed to be at the ready, waiting, pacing back and forth, waiting for the market to do something. Don't try to get ahead of the market or predict it. Just let it play out. You know, if it decides to move quickly downwards, that's okay. You missed the big move downwards, it's cool. That's not your move. Catch the pullback on the continuation if there is a continuation. That's worth a lot more to risk on than trying to predict when the break is going to happen. Take care, everyone. I'll catch you tomorrow. If you're in the convergent, if you're in convergent, you'll find that I'm not likely to comment too much today. If there's nothing to comment about, I just don't comment. This is how we do it in prop. If there's nothing to talk about relating to the market, then shouldn't be talking. It should be a quiet room. Good luck, and I'll catch you tomorrow morning, everyone. Take care.